please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good afternoon. You're watching Your Stocks. I'm Manglam Malu. With me is Sumaira Abdi. Sumaira, ho-hum sort of day for our markets. We recovered a fair amount from the low point of the day, but then we've given up a few of those gains from the high point as well. Still sitting with cuts of about 30 points on the Nifty.
Yeah, Manglam, good afternoon. And you know, that tick lower looks like it's probably going to extend. Doesn't look like it's ending there yet. So perhaps we could, in the final 1.5 hours of trade, perhaps see some more red. But let's get started. First up, our top stories. It's a choppy day of trade. Key indices recover from a gap down open, but they're off the day's high, marginally in the red. The Nifty bank erases all losses driven by HDFC and Kotak Bank.
The Italian poll fiasco continues to remain in focus, but the European markets, they open in the green, mildly in the red as we speak. But influential investor George Soros warns that another major financial crisis may be looming.
Coal India stock rises on management optimism. The company outlines a production target of 630 MT for FY19. Glenmark Pharma, though salts, the management expects the US business environment to remain challenging going forward.
SEBI to discontinue FII trading window for equities from the 1st of July. HDFC Bank may see aggressive buying when this window opens for foreigners.
And the Jubilant Food stock is under pressure after 3 lakh shares exchanged hands in a bulk deal on BSE this morning. The street awaits clarity on who the seller is, the identity of the seller. Earlier, remember, the management had denied parts of a stake sale. Well, those are our top stories. Let's get started. It's time to answer all the queries that have been coming in. Shaina Mukaddam and Sandeep Wagle are our 2 experts this afternoon. So good afternoon to both of you. Our first query comes in on Axis Bank, and the caller we have with us is Sampath, who's on the line with us from Pune. Sampath, hi, good afternoon. And it looks to me like you're making some money. So congratulations. How could we help you?
Good afternoon. I am Sampath. I'm a retired person. And a part of my retirement funds I had put in Axis Bank some months ago. And this is a long-term investment for retirement to take care of my needs in future. But I see that the stock has not been doing well in recent times. NPA issues, I think, over a period of time will get resolved. But some other issues like governance and transparencies are and all. Should I continue holding this stock for long time purposes? Yeah.
You're right. So actually, your query is not entirely unfounded. Shahina, for investors who are a little bit, you can say, jittery with the, the lack of clarity, or, the management had tried to address it this time around with the earnings. But nevertheless, this doubt would, I guess, remain with some investors. Therefore, what should somebody who's making money at this point do? Is it a good exit opportunity?
No, I would advise the investor to continue to hold. These are the worst times, as we've seen even in terms of NPAs, as the investor was discussing. NPAs were pretty bad at 3.4%, up compared on both YY as well as QOQ basis. So definitely that is a concern, along with corporate governance, the issues that he's been raising. But I think if you look at pure valuations, and I think that is what we need to really look at as of now. I think in terms of valuations, Axis Bank does stand ahead of some of the other private sector banks. And I think this is the worst period. So I think to continue holding, I would see even technically the charts looking better. So I would continue holding with a target of 600, keep a stop loss of 500.
All right, continue holding the stock, and technically as well, Shaina says this looks good. A target of 600 is what she has. So that's the view coming in on Axis Bank. Let's move on to the next one. We have Prema. She's calling us from Pune with a query. Go ahead, Prema. Actually, Prema is calling us from Tamil Nadu. All right, go ahead.
Yes, ma'am. Yes, sir.
Go ahead.
I have 75 capital first at the rate of 725. I must hold 2 years.
Okay, okay.
What is the view of the share?
All right, fair point. Sandeep, Capital First at 725. She's sitting on a bit of a loss. She can hold it for the next 2 years. Remember that impending merger with IDFC is due as well. So there are a lot of fundamental triggers for this stock. But chartically speaking, how does this one look for the next 2 years?
Afternoon, Mangalam. Unfortunately, the charts are not looking that good, and I'm in the sell on any bounce back that comes in the range of 600, 620. I don't see those levels being held on to. On the downside, if 505 is broken, the stock may even go down to 400. So that is another caution. So I would recommend an exit nearer the 600, 620 range.
All right, that's the word on Capital First. Up next, we have a query coming through on Force Motors. Mr. T. Radhakrishna writes to us from Bengaluru. He holds 25 shares of Force Motors, which he's bought at closer to those 4,500 odd levels. The stock trading at about 28.77 now. He's a long-term investor, wants to know what he should do. Shaina, the stock has not had a very good last 1 year. But nevertheless, I remember it being quite a favorite with a few investors. Earnings seem okay. What would your advice be?
I would suggest continue to hold the stock. I think there are a lot of new areas which Force Motors is entering to, which is pretty exciting, especially in the engines which they are manufacturing. I think they have a latest tie-up with BMW also. I think all these factors put together with a nice, strong balance sheet. If you see, it's almost a zero debt company. And in terms of valuation also, if you look at EV by sales, it's just about 1 time. So I would continue holding the stock. Yeah, it's like shown a considerable dip from the earlier highs of 4,200 types of levels. But I would still continue holding. I keep a target of 3,600 with a stop loss of 2,700.
All right, continue to hold Force Motors. That's the advice coming in from Shahina. Let's move on to the next one. Another auto company is the one that we have for a query. Nitin Advani from New Delhi holds 2,000 shares of Ashok Leyland, 143 rupees a piece for the last 1 week. Short-term investor wants to know whether to hold or sell. Sandeep, the charts of Ashok Leyland, the stock's seen a big move in this year, about 25%. He's making some money over the last 7 days. Do you think uptrend will continue, at least in the short term?
Well, Mangalam, short term, I am not too confident. I would talk of a range of 140 on the downside and 155 on the upside. So nearer that higher end of the range, I would recommend him to book. And in case 140 were to be broken down, around 138 can be his stop loss. But if he is willing to wait for a long term, anywhere between 3 to 6 months to maybe 1 year, I see the stock well above 200.
All right. Expand your horizon and you can see the stock going to the levels of almost 200. So that's the word coming in on Ashok Leyland. Just keep an eye out on the markets. We're seeing a bit of decline. We're back below the 10,600 mark for the Nifty and led lower entirely by heavyweight HDFC Limited. HDFC should come up for you. That one's at the low point of the day. Along with that, we have Maruti 2, which is testing the lows of today's trading session. And we have ITC, which again is at the low point of the day. So we'll keep an eye out on these individual stocks.
Well, just some stocks which are catching your eye at the moment. So Jubilant Food is amongst them. The stock is now down about 2.5%, but from the top it has lost 6%. Remember, there has been this buzz that the promoters are looking to sell about 10% stake. In fact, Nimesh is the one who brought us that story. The promoters have come out and flat out denied that there is any such plan. But there was a block deal earlier this morning of about 3 lakh shares which changed hands, and since then the street seems to have been a little bit spooked and awaiting clarity now regarding the identity of those sellers. So that will remain in focus through the day today. But let's get back to answering some more queries. Shaina and Sandeep are our 2 experts, and on the line with us now we have Mr. Arun Kumar, who joins in from Bengaluru. Hi sir, how can we help you?
Yeah, thanks for calling me. And just wanted to know what is the status of ECL,
Okay.
Electrosteel Limited.
You have some investments in that?
Yeah, I have almost 1.5 months. I took it up, bought it, and it was somewhere around 2 rupees 80 paisa. Now it is around 1 rupee 20 paisa. It is running.
Mr. Kumar, you bought it for a punt, or what was the rationale behind it? Because, 2 rupees 80 paise, the stock had seen a sharp correction. You thought, It was, I mean, what was your rationale behind buying this?
It was the short-term trading which I wanted to know. I wanted to try. So maybe a couple of days, and again I wanted to dispose it off. So now, since then it is falling, and almost 1 rupee 20 paisa is running right now. Since 2 days, it is again varying 110 and 120.
Well, Mr. Arun Kumar, it's you know, it's a difficult situation that you're in. There's no doubt about that. Electrosteel Steels is one of those you know, resolution candidates, has been for a long time now, and perhaps punting wouldn't have been the best way to approach an investment in the equity market. But Shaina, let me come to you for your opinion. You know, there's news flow coming through this afternoon, and the reason behind that rally that we're seeing in the stock is that there's some bit of interim relief that has come through. The NCLAT has, you know, allowed Vedanta to proceed with making an upfront payment for the resolution of Electrosteel Steels. So that seems like a big relief. But for somebody, I mean, who's caught in a situation like this, what would you, I mean, how would you think they should move from here?
See, Vedanta is going to acquire Electrosteel. So to that extent, I mean, I have a positive on Vedanta, and I continue to hold Vedanta in my own portfolio. But having said that, I think, you know, if you're trying to play this as a technical bet, the market is not really, I mean, the stock price is not really supporting that. And to an extent, if you see the balance sheet, there is nothing, I mean, huge debt. That is why it is being acquired. So I really don't know.
Okay, so basically you're just saying that a person should get out. That's probably something that we've seen on the other stocks as well. The likes of Alok Industries, Ruchi Soya, Bhushan Steel, all of them have lost a fair amount of wealth. But we're getting some important lines come by from Moody's. They have cut India's 2018 growth forecast from 7.5 to 7.3. And they've maintained the 2019 GDP growth forecast at 7.5%. So we'll keep an eye out on the modalities of this.
As expected, crude is one of the big reasons that this is happening as well. The reason they're saying is that the financial market stress that we're seeing in the emerging market space, the kind of uptick we've seen in oil prices, as well as the trade tensions between US and China. So those remain some of the factors. So the whole, I think, emerging market countries forecast has come down a little bit, and within that, I think India as well, for 2019, the GDP estimates scaled down a bit. But let's focus on some earnings that have been coming through. Info Edge has actually disappointed this time around. So, you know, they've seen a sharp jump in their ad spends. That seems to have hit margins quite a bit. And in fact, profit is down about 60% in terms of 99 acres. Losses have widened quite significantly. Hitesh Oberoi, the MD and CEO of the company, now joins in. Mr. Oberoi, good afternoon. It's a tough quarter. There's no other way to say it. Let's talk about 99 acres first, you know, because over there, since I think Q3 of FY17, your losses have expanded quite significantly, actually. What's going on there? And, you know, for FY19, what's the outlook now?
Actually, 99 acres had a very good year. You know, our losses came down compared to last year. And we gained share in all the geographies we operate in. Q4 growth, Q3 and Q4 growth also picked up substantially over the previous year. We grew by, our collections actually grew by close to 54% in Q3 and 43% in Q4. And, you know, yes, of course, losses went up slightly because we spent a lot more on marketing than we have been spending. But that is, you know, with the intention of gaining market share, which will hopefully help us in the long run. So we are very happy with the performance of 99 acres, especially in the second half of this year.
All right, but you know, the sharp spike that we've seen in your ad spends, Mr. Oberoi, nearly 120% increase there. hasn't seemed to have impacted the growth or accelerated the growth that we've seen in your revenues across verticals quarter on quarter. Billing in Naukri, for instance, can you tell us that why has revenue growth slowed down quarter on quarter with the sharp increase in ads? What kind of revenue growth can you see in FY19 across your verticals?
Yeah. So you're right. I mean, ad spend went up substantially last quarter. But a lot of this ad spending was on, one, of course, in the 99 acres business where we saw massive or a good revenue growth. But a lot of the ad spending was on the Jeevan Sathi business. Now, the Jeevan Sathi business had a tough quarter. Revenue grew by only 10%. But you know, our strategic sort of goal in Jeevan Sathi is to grow volume more than revenue at this point in time. As you know, we are a number 3 player in this category. And the only way to sort of get you know, to the top in the medium term is to get massive volume growth. And for this reason, we've been sort of spending more on advertising and also discounting to get volume. And it's a small part of our total business. But yes, the ad spending in Jeevan Sathi went up substantially over last year.
Okay, just focus a bit on Alchem Labs actually. Look at the intraday chart. That stock has taken a bit of a knock actually post the numbers, down about 4% now. The top line has grown a tad, but operationally the numbers are looking weak, and that's translating to their bottom line as well, where there seems to be a cut of about 40-50%. Mr. Oberoi, come back to your earnings then. This focus on ad spends, or rather on you know, this increasing trajectory of ad spends, how long you think that might continue, and what's the outlook here for the coming year?
Yeah, so you know, most of the ad spending or the growth or the increase in ad spend was on account of the higher spend on both Jeevan Sathi and 99 acres. 99 acres has been responding well to the increase in ad spends. The market is bouncing back. We are gaining share. Our revenue growth is up. So we will continue to sort of invest substantially in advertising and marketing in the 99 acres business. In the Jeevan Sathi business, we are continuing to grow volume. You know, despite our revenue growth in Q4 was 10%, but our volume growth was about 40%. So as long as we keep getting volume growth, we would like to continue to invest in marketing, because this is good for the business in the long run.
All right, so how much money have you earmarked for both these businesses for FY19 in terms of spend?
Well, we don't have a budget. We, you know, look at things on a quarterly basis.
Per quarter, if you
we
must,
sort of
at least
spend money, then we look at the response we get.
So we're about 2 months into this.
I can't give you our plans right now. I can't tell you our plans right now. But yeah, I mean, if the businesses respond well to marketing, we'll continue to invest more in marketing.
Okay. Let me come back to you know, this 99 acres. When might things turn around? I mean, when do you think you might start making a profit there?
Actually, you know, if I were to look at things on a cash basis, you know, because we collect money in advance, and some portion of the money we collect in advance is recognized as revenue over a period of time. It sits in our books as deferred revenue. 99 acres had a very good year. On an EBITDA base, cash EBITDA basis, the business lost just 4 crores last year and actually made a profit of 5 crores in the last quarter. So we are very happy with the progress we're seeing in 99 acres. Yes, we are investing more in marketing so that we can gain share, because that's good for the business in the long run. But the business metrics have improved substantially over the last 4 quarters. On a cash basis, we just lost 4 crores last year.
All right, Hitesh, before we let you go, SoftBank is fresh off the money that it's got from selling Flipkart, looking to buy Zomato. How much stake are you willing to pay?
I think you have to speak to the Zomato management for that.
Okay, we'll let you go on that one. With that, we'll take a short break, come back, we'll focus on some more stocks and queries. Are still off the highs. A couple of stocks, they're attempting a bit of recovery. Titan, for instance, should come up for you. That one's recovered a fair bit from the lows currently at the high point of the day. And we have a few IT stocks as well. Tech Mahindra, after the day of the results, took a bit of a drubbing, currently sitting at the high point of the day. And we have HCL Tech too. In the mid-cap end of things, We have Reliance Communications. That one's surging as we speak, up about 13%. And before we wrap, it is the Nifty Bank, which has once again moved back into the green. So we'll keep an eye out on that. Some numbers coming in. Murudeshwar Ceramics, 59% jump on the EBITDA. Stock up 17%. We'll keep an eye out on individual stocks as well. But all of that on the other side of this short break, where closing bell comes up next. Stay with CNBC TV 18.